All right, so we have our assessor, we have two members of the select board. We have the town clerk. Do we have the town clerk? Oh, I see her. Lori, I don't know if you're intending to have your camera on, but it looks like your laptop camera cover is on. There you are. All right. Okay, so I think we have the people that we need in order to do our business today. So I'm going to go ahead and open the select board meeting. Today is Friday, December 13th. It is now 10:06 a.m. We have just a couple of matters to take up today. Let me just pull up the agenda. All right, so the first quick item of business, we have two consent items, and I'll read them off. Number one is to approve trash liens in the amount of $1,606.46. Number two is a required vote by the select board in the amount of $229,886.75 for the write-offs for the ambulance receipts for FY24. This presentation was made on Monday, but we neglected to actually vote on it. So we've put it on the agenda for today, just to make sure that the appropriate vote has been taken. Kirk, I just want to make sure we can hear you. Are you there?
Yes.
Okay. Excellent. So barring any objections, are there any objections, Kirk?
No.
All right, I have declared that the two consent items have been approved. So we'll move on to the main reason why we're here today, which is the annual tax classification public hearing for FY25. We have our principal tax assessor, Kateri Kloot, here to present for us today. Kateri, well, so first off, I just want to say, I know there has been some concern around the scheduling of this meeting, and I recognize that it is not ideal. We are between basically a rock and a hard place with regard to timing on this, as the necessary documents in order to conduct today's hearing were not available until after our select board meeting on Monday, which was when this was originally scheduled to take place. Unfortunately, the timeframes that are necessary for the town hall to continue to do their work and get the tax bills out as required on time for December 31st in order to maintain cash flow for the town require that we take this up as soon as possible. And this was the day that was available. So here we are. I apologize for any inconvenience that it might cause anybody to have to be here at 10 o'clock on a Friday. But it is an unfortunate necessity. So hearing that, I'm going to turn it over to Kateri to give us some background. Kateri, I'm going to ask that you, because we have the opportunity today to provide some education, I think it would behoove us to just give a high-level overview of how the tax rate is set to begin with, and then we can move into the tax classification hearing. You're muted, Kateri.
There we go. Can you hear me now?
Hear ya.
Okay. And I'm sorry, I had to switch from like my desktop to my laptop. The desktop was not cooperating. And I don't have any sort of prepared statement together as far as how this process goes. So, you know, excuse me? I heard someone comment. So but just on the quick, the assessors, we do a lot of work during the year. The fall really is our crunch time to get all of our sales analysis, all the growth calculated, new accounts set up, all the personal property reviewed and input. And this, as I had stated to the Board of Selectmen during my September update, this year, I had some wiggle room or extra funds in my budget And I utilize that for a personal property appraiser. And this is a company that's very well known. They used to do work for Paxton years ago. So along with me and them, we did a review of all of the accounts. And the unfortunate part of that was that I didn't get their data until the second week in November. And then I had to review all that data and then input all that data line by line by line. And it was a very tedious job. So things were delayed, due to that. However, we did realize some nice growth in the personal property area. So once all that's done and real estate was done, I then calculate, the Vision appraisal software, I print out reports from them, and it comes up with all of the values. Then all those values have to be submitted to the state. All of the growth calculations and all the growth lists of every single parcel that had growth gets submitted to the state. The state reviews it. And believe me, they review it with a fine-tooth comb because I get asked a lot of questions. So those approvals did not come through. So at that point in time, that was the time that we could set a tax classification hearing. However, there's still a lot to be done from that. I have to, the accountant has her piece, her numbers were in. Once I put my approved values in, she had to finish a few things. So unfortunately, it does take a lot of time. It takes a lot of working between different departments. And we came up with a calculated number by early Tuesday morning or late Monday night, early Tuesday morning on what the rate would be. And then I could set a hearing. And that is what happened. So it's a long, tedious process looking at everything. I'm going to open it up and I'm going to state publicly, if there's any resident that wants to come to a Board of Assessors meeting and find out what it is we do, why we do it, how it affects the town, they're more than welcome to. Our meetings are in person in my office at least once a month. And we can go, and then they can ask their very detailed questions of all three board members. Mm-hmm. Is that okay, Julia?
Yeah, no, that's great. So essentially, we'll move into the tax classification hearing now. And Kateria, again, I'm probably going to ask you to be very descriptive as we go through this, just to make sure that everybody has the opportunity to understand the decisions that are made here.
Correct. So during a tax classification hearing, the Board of Selectmen is obligated by law to make 4 decisions. The results will be used for the Board of Assessors to calculate the tax rate. So the packet that was posted, I think it's it must be page 4 on the packet. Mine's numbered differently because I have it in my office. It's my working copy. However, is it page 4? Yeah, it says Town of Paxton FY25. On the top of that page is Factor 1. Factor 1 is a single tax rate. So, and what it shows is the tax levy, which that's somewhat generated by the accountant's office based on all of our revenue and expenditures. That's not something I have a hand in. However, the second line down is the total full fair cash value of all taxable property in town. So that even that's real estate, commercial, industrial, and personal property. And the classes are broken down. So as you can see, it comes, if you look at all the total town total, it would come to a $14.74 tax rate for fiscal 25. Down below is a breakdown of residential, commercial value, industrial value, personal property value, and then percentages. It all has to equal out to 100%. So the percentages are there. Residential takes up 96.5918%, and CIP, which is commercial, industrial, personal property, takes up 3.4082%. And it all totals to 100%. So the select board is charged with taking four votes. So this calculations here show what it would be if it's a single rate. And then the calculation under Chapter 797, which is what they call a split tax rate. So CIP, commercial, industrial, personal property, would pay a higher tax rate versus the residential rate. And there's calculations there. I mean, the maximum allowable is 150% of the 3.42 of 3.4%. So that would be 5.112%. And it does shift a little bit of the burden. It takes some of it a little bit away from residential. It puts more of a burden on CIP. And in this town, for this town, the way the numbers come out, under this Chapter 797, there'd be a very small decrease to the residential class by 26 cents per thousand. But the increase to the CIP class would be $7.27 per thousand, bringing their tax rate up to $22.11 per thousand. So that's how that flushes out. And so the select board is charged with making those decisions on whether or not they want to use factor one or Chapter 797 and go with a split rate. The second thing that the select board needs to do is they need to vote on whether or not there's going to be a discount for open space. So recreation space, open space, non-developed, open land. They can allow a residential exemption. And a residential exemption is basically, we don't have a lot of vacation property in Paxton. So if you were in a community that had a lot of vacation property and people are renting it out, the full-time residents, permanent residents would get kind of a break, and more of the tax burden would be put towards those residents that have second homes and vacation homes. And then the last item that the select board needs to vote on is whether or not they want to allow a small commercial exemption. So all of those calculations are under, and all those questions are in that spreadsheet, and there are explanations to those as well on the commercial exemption. So, Julia, any questions on this? Julia and Kirk?
I have no questions. Go ahead, Kirk.
Okay. Is Carol on here as well, or?
I don't believe Carol could make it today.
Okay. Well, I just want to make sure I addressed the three of you by name if the three of you were here. So,
yeah.
Okay.
Kirk, do you have any questions for Kateri?
I do not.
Okay.
All right. So Kateri, before we take a vote on it, I would like to open it up to the public for comments and questions.
To you or to me?
To you.
Okay. I will do my best.
All right. Any comments or questions from the public for our assessor on how this is calculated? I don't see any hands.
And I'm sorry if I'm looking down, I'm looking at my spreadsheets and numbers. So,
Mark, I see a hand up for Mark. Go ahead, Mark.
yes, Mark,
I think I'm unmuted. Can you hear me?
I
Yes.
can.
Okay, so just cosmetically on page 4, item B,
Yeah,
there's a pretty good legend in terms of what RC I and P stands for.
or CIP.
No, I understand. Yeah, but then
R,
in
R,
item,
R is residential and then C is
no,
commercial.
Kateri, I understand that. It's nicely detailed, but then if I go to item D, it has an O, which we know to be open space, but it's not
Mhm.
legend in up above in item B. I just think that would be a more
It's
complete
not in,
document.
so it's not in item B because open space values fall under residential values.
Yeah, it's not
If you look above.
known to the,
All right, noted, Mark.
yeah, it's not
Noted.
noted to the,
Noted. This is how, these are state forms that I fill out and we plug numbers in, but noted, I'll make an asterisk and note it in the future.
so on page 6, I don't want to get ahead of you, but I think Julia opened it up to public. If you're going to go to page 6, I'll wait, but on page 6, it doesn't look like this has been signed off by anybody at,
So let me explain this process, okay? This will not be signed off until after this hearing. And I'm the assessors are the ones that go in and sign off on that. Okay, so after the hearing, there's many pages under our access in Gateway. It's not just the tax rate recap. It's multiple different pages that need to be signed off by the assessors and then submit. This tax rate recap is one of them that the assessors do sign off on and then submit, but they have to be signed off after the tax rate hearing. Because if there are any changes, and if we've already submit this to the state, then we need to contact them. They need to unlock it. They won't accept it until after the tax rate hearing. They won't accept a submittal of any of these documents until after the tax rate hearing.
yep, okay.
And typically in the past, I've had the tax rate hearings and then I come straight to the office and do everything I need to do and then do the submittals. I mean, it's probably 10 different documents that need to be submitted.
Okay, so it's
Right.
going to come later on. So
It will come today. It will come today once we get through this and Julia and Kirk can sign the LA5, which that's not part of this package, but that's part of, okay, we've done everything we need to do. I've posted the meeting. I've posted the hearing notice. We've done the voting. Lori Becker is online on her day off to watch this hearing and certify the vote. Then Lori has to go on and certify that vote. I need to upload the signatures. I need to certify it, and then I submit. So it's all done in a process. So that's why you do not see, none of these have changed. No numbers have changed because we can't. So these numbers on the tax rate recap, they're numbers generated from the values that I submitted. And then, because I submit on one form, and then once they're approved on that LA4, which approves values of all real property and personal property. Once DLS approves those, it's an automatic generation over to this tax rate recap. So the LA4 has been submitted and approved. I can't make any changes to that. The only way some of these tax rate recap numbers change on the classes is if I have to go in, ask for that to be unlocked and make the changes. So there's a whole process here. And unless you fully understand the municipal government side of this and that side of doing all these forms on DLS, for DLS and submittals. It's hard for, the general public to understand and really see that side of it. But then everything that's generated from here, as you know, Mark, is then available to everyone on the data analytics side of Division of Local Services, which anybody can see those numbers at some point in time. It's not broken down, but it's just the whole numbers. This was the total growth number. This was the total value number. This was the residential value number. This was the personal property value number, but they don't see all the details behind that. But this side of it is our working side. That's why these aren't signed off on. Most of the others are signed, except for the tax rate recap and the LA5, which can't be done until after our meeting.
So Kateri, can I let's walk through quickly, and Mark, I'll come back to you if you have more questions. I just want to provide a little bit of background. So our total tax levy from last year is the first number that's input into all of this, correct?
Hold on, let me, so on my desktop, I'm going to pull up Gateway. So I'm working with two computers, two mice.
Yeah.
Let me pull this up. It's a quick login for me, and I'm in. Okay. So we want to look at the tax rate recap sheets.
On a very basic level.
Yes.
Every year,
yes,
the town can increase their total tax levy by 2.5% plus new growth, correct?
Correct.
Okay. And so when you're inputting all of the information into DLS around new growth based on the assessments that you have captured,
yes.
that's what you were talking about earlier.
Yes. There's a certain form and sheet. So it's called an LA13. That is very detailed sheet with any property, any account, personal property account that had new growth. It's extremely detailed. The state requires a lot of information. So even on a residence, it requires the GIS code.
Mm-hmm.
And believe me, they looked that code up, and they've got overview, and they can see if a pool went in. They can see if there's a new shed. When I say we have a new home going up and is 50% done, they look at that. Yeah. And they'll say, well, and they've got this, they pay for it. The state pays for it. For a little town like us, it would cost $10,000 a year to have this software. But the state has it, and they can look at every community, and they can even get 3D stuff and get measurements.
Great.
And they trust me, they do that.
The point I'm trying to make, though, is so we have our tax levy from last year, which you can see, which is the 12,575,076.57 number, right?
Yeah, hold on.
And the way we get to the FY25 number is through 2.5% added on to that, right?
Yes.
Plus the state's approved amount for new growth, right?
Correct.
Okay. And then the way that gets calculated back down to what is now the tax rate, would you mind explaining that?
So they take all of, let me get to the detail. Page 1 shows it. Let me get here. I'm sorry, I'm flipping around. I have sheets in front of me, and I get the screen up. So they're looking at, the levy percentage for residential. They're looking at, which is the 96.59. They're looking at what the levy is going to be, the tax levy.
Yep.
So it's amount to be raised minus the estimated receipts. And they then get that full valuation. And basically it's C divided by D. So your brings you times 1,000 brings you to that 1474. So you take that C, which is your levy
Yeah.
of 12 million, divided by D, which is your valuation number, and times it by 1,000, and you get your rate. And they break it down by class. So that's page 1 of the tax rate recap, and they go across by class.
So
and
that's, yeah,
as you
thank
can
you.
see,
So that's
we-
exactly what I wanted you to just tell people is how
and
that,
we-
on a very basic level, how that's calculated. So we take the tax levy from last year, or I say DLS takes the tax levy from last year, adds 2.5% to it, adds the new growth to it. And then that gets divided out among the fair cash value of all the properties in town, which is what gives you the 1474. So if you're looking at this sheet here, it is going to be that 863,062,187 number. Let's see, bear with me.
Well, so on page 1 of the tax rate recap, so that would be, I think, page 6 of my packet. And I'm sorry, Mark, I'm looking at it on the screen, and then I have to go to my packet that I have. So it's easier for me to look at the screen since now I've logged in again. But in the numbers just go across, and as you can see, we have no open space. We have no percentages of open space in town. We just have the residential, commercial, industrial, and personal property. And it just goes right across. It's the same math right across for all of those percentages and all the values.
Yep. So it's essentially just that 12,721, 536 and 63 cents divided by the total amount of property in town, 863,062,187.
Yes.
And that's where, and multiply that by 1,000, and that's where the tax rate of 1474 on 1,000 comes from. So that is the new tax rate, correct? As calculated, 1474.
That is the new tax rate as calculated.
And last year's tax rate, you can see, was 1607.
Yes.
So it's a reduction in the rate. Now, why, Kateri, can you explain why we're seeing a reduction in the rate when everybody believes or feels
so part of what the assessor's office has to do every year, we have to do an analysis of the sales. So for fiscal 25, which what we're setting, we had to analyze all the sales in town from calendar year 2023. If we don't have enough to analyze, we have to go back maybe 6 months, 6 months further. So, and that's what we had to do this year, because maybe we didn't have enough in a certain class. Maybe we didn't have enough in, land, vacant land or land. So we might have to go back 6 months, an additional 6 months to a year to see what our land sales were. And then what I end up submitting to DLS, it's coded. So there's a lot of property codes, many property codes, single family homes, vacant land, buildable land. So most vacant land it's coded. It's either a buildable lot or it's a non-developable lot. It could be, commercial land, industrial land. But we have to do a full analysis on all of the sales, and come out with, Massachusetts is a full fair cash value state. They want your properties assessed at the full fair cash value, 100%. But there's some wiggle room. They like to see it between like 91 and 100. And those are submitted. And that's a very large submittal. It usually goes in September. And that helps generate the values. Once they approve the sales, then that information, someone gets input into the assessing software. So, it breaks down to like square footage amounts. It breaks down to, your average sales amounts. It's not, someone came in my office yesterday and wanted the exact calculation, it's not an exact calculation for each and every home. Because she wanted to know why her home was this percentage and that the other home next to her was this percentage. Well, not every home is apples to apples. It takes into consideration the building grade, the bathrooms. What's your style of bathrooms? Do you have a chef's kitchen? Do you have a custom kitchen? Do you have just an average kitchen that you've never touched? That's how that goes. But it's a very long process. It's a very analytical process when we're looking at the sales. Those go in first. Those get approved first. Growth then goes in, and when the growth is done, then we can generate the reports for the values, because the growth adds on to those properties.
So in short, if the tax rate is going down, but the tax bill itself is going up, it is because the value of the property has gone up. Correct?
So this year, let me see, I printed out some other. So this year, it looks like it's about a 10.5% increase in overall residential value over last year. And let's see, commercial went up. We didn't have a lot of commercial building sales, but they all adjust a little bit. That went up by 1.4%. But total, when you average it total, it was 10.3% over last year. But most people were mostly a residential town. So last year, the residential increases were a little higher. We were close to 13%. This year, it's 10.5%.
Terry, now that we have a new tax rate, can you tell me what the average tax bill will be now for the average appraised home?
Yeah, so that is also on this calculation, this sheet here. Let me see. I have to go to the next page. Okay, so for fiscal 25, the average residential valuation is going up to $506,668. So at the tax rate of $1,474, we will be looking at a bill of $7,486.29. Last year, the average value of a home was $459,020, and that average tax rate was $1,607. It's a couple $100. I don't have the precise number in front of me, but it is a couple $100 difference. Okay, here we go. Last year, I just pulled up my other sheet. Last year, $459,020. Tax rate was $1,607. Average tax bill was $7,376.45. This year, as you can see, the values have gone up. So the average value is now $506,668 with a tax rate of $1,474. The average tax bill will be $7,468.29. So less than $100 overall increase. And we might find that certain types of homes, colonials versus ranches versus capes versus contemporaries, they might see different percentages in their value jumps. It's hard to note which is which, whose is whose. And the public knows that I get a lot of phone calls after the first of the year for wanting explanations. do. The residents come in and sit with me, or they call me. I'm on the phone with them. It could be a 30, 45-minute conversation. And I make sure that all of our detail that we have is correct.
So, Mark, I want to come back to you. I don't believe you were done, and I see your hand is still up, so I want to make sure that you have the opportunity to ask any further questions you might have. And then Sarah, I see your hand is up, so I'll move on to you after.
So I think if you allow me, Julia, two quick questions. I think your question, Julia, led to some very good information in terms of average a year ago, average this year, and so on and so forth. For what it may be worth, I would recommend that be a sheet that's part of the presentation in the future, because let me finish, Kateri, please. That was pretty all telling in terms of what really are the questions out in the public forum. So I just think it would be a very good idea. Plus, Julia, you made a clear distinction on page 6 that, yes, the rate did go down, but the valuations did go up. So therefore, people can assume that the taxes will go up. But the follow-up question indicated that, surprisingly, it was lower than I would have anticipated, but that's nowhere seen on the sheet. So that's just a statement. My question is it possible for Kateri to walk us through pages 7, 8, and 9?
So here, 7, 8, and 9. That is the rest of the recap, and that's more of an accountant question.
So I believe we have Liz on. Liz, is that something that you'd be able to walk us through? No, that's not something Liz can walk us through.
Mark, do you have a specific question on these sheets? I mean, I sit every year once Kateri has all of her numbers in. What ends up happening next is Larissa and I sit. Larissa pre-populates everything. Some of these numbers are automatic. We know exactly what the numbers are because they're the number. For instance, in the cherry sheet piece, when you get down to section 3 down here, you'll see the estimated receipts for the state. That's the number that has been approved on the cherry sheet. When you look at the other pieces, free cash, other available funds, those are numbers based on whatever we use for certain things. So those come directly from the town meetings. The only thing in here that Larissa and I spend time on, and we do modifications from what may have been on the original requested numbers, was the local receipts, which I think is down a little bit further here. Where on earth is it? Oh, here we go, down here. So when you get to the local receipts, as folks may recall, when we're at town meeting, we talk about the estimated receipts, and we spend a lot of time with finance when we're originally trying to calculate these out. When we get to this part of this process, the reason I sit down and we end up doing a little bit of massaging of these numbers to get everything to fit in. What usually happens, and has happened every year but this year, is that we end up having, because numbers from the state for the cherry sheet come back higher than we anticipated, other numbers come back usually a little bit more favorable. We go in and based on the numbers we had originally estimated for local receipts, we generally go in and we drop those numbers down lower, so they're even more conservative, and then everything balances out. This year is the first year in the past 3 where we had the opposite problem. Based on the pre-calculated formulas from the state and the state sheet that Kateri had described, where she puts in all of her pieces and then things self-populate, we actually had to go in and we had to adjust the local receipts up about $66,000, give or take, from what we had originally estimated at town meeting. Because we try to do these in a conservative fashion when we're doing the estimates, we had a little wiggle room. What that looks like for Larissa and myself is we sit there with the original projections in our hand, and we also sit there with the first quarter of what the local receipts have come in at, so we can figure out where things are landing and what it looks like we could actually project out. In this case, when we were looking at these numbers, we upped a few of them. I don't remember specific, but I think I can be pretty on point. One was motor vehicle excise. We had a lower number there. Because we finished last year so high, we were able to increase that number. And that's where the bulk of our increase went, based on our estimates. From the past couple of years, we did try to be conservative because last year seemed to be a little bit of an anomaly, but we're hoping that that number will still work itself out. Oh, sorry, I'm trying to slide down the sheet here. The other number that we did tweak, when you go into just, let me see where I find it on here. There's just local receipts itself. Trying to figure, I'm not sure.
Heather,
which
can
one
I
to
just
find.
give you a
Yep.
quick, couple of quick numbers? How about 11, 14, 16, 20, and 23?
Okay, so 11 is rentals. Right? Rentals is
Yes.
always going to be 0 because a year ago we changed from taking in the revenues and putting them into our local receipts from 10 West rental, and we made it into a revolving fund. So those monies stay there and then we can utilize them and realize them as we need for that building. So that's going to be 0. And we even budgeted that this year when we did meetings with FinCom and everything else as 0. What's the next one, Mark?
14?
14 cemeteries. I don't remember what the realization was. So you see here 2 different numbers. The first number is what things ended up coming in at, and the second number is the estimate. I don't have, I mean, I can pull it up, but I don't have directly in front of me the numbers we estimated when we were doing things. But if you remember, our numbers kept coming in lower on cemeteries throughout the year last year. So we had got nervous and kept the number lower. That could still come in higher, but there's also a chance it kind of hangs out right there. Next one.
17, A and B?
17 A and B. So building permits. So our building permit number we had estimated, I think it was around, I think it was actually at 35,000. We usually like to look at it and see if we can tweak it up higher. Again, we can only use, you know, we look at the past couple of years, the past year, and we also look at the first quarter. Not even first quarter, but I pulled year to date, everything we pulled in for building permits. And while building permits have been pretty active this year so far, the majority of them have been window sidings, roofs, install boilers, you know, small pieces of things. And the total amount of revenue we've pulled in for the building permits for the first half of the year is only about 10,000. So even though we haven't got to the spring season yet, when we start to see things really pick up, usually we have a lot more realization of larger additions and improvements during the summer. We didn't see that this year. So even though the quantity of building permits pulled is pretty steady, the projects pulled are much smaller. So at this point, we're only at $10,000. The $35,000, to be honest, is already making me nervous that we're going to be able to realize it. Last year, the state pulled out building permits separate from electrical and plumbing. So building permits in this case is strictly building permits. It's just, you know, the roof, the addition, so forth. When you get to electrical, plumbing, HVAC stuff, that is in the other licenses and permits. Plumbing and gas, on the other hand, have actually been doing really well. I believe one of them we had estimated about 8,500 for the year, and the other one we estimated about 6,500. And based on where we were year to date, we felt both of those could get closer to 11,000 or so. So we were able to up that line from what we had originally estimated at the town meeting by about $10,000. That's why that number's a little bit higher there. What other questions, Mark?
I think I know the answer to 20, but could you expand on that?
Sure, I can. So investment income. So this line boomed last year because of the interest rates and also because we're super lucky. One of the things we've had hanging out for us for the past couple of years that's been making us a little money has been the ARPA funds that were in the coffers just adding interest. We did purchase the fire truck and we paid for that about halfway through October. So that's $750,000, $750,000 is gone, is no longer hanging out there. It's not to say we don't keep money in our accounts and so forth, but we don't generally have just an extra million. The numbers are more, you know, more of a flowy thing than what we've been lucky to have past couple of years. And if you don't have that much money sitting there, you're not going to generate as much interest. Luckily, the interest rates have not currently dropped. And if anything, Liz has been pretty aggressive and been able to get us some better returning interest rates on some things. let's see, the first quarter, so as of the 9/30 report, which is the last one we currently have out there, we had about $25,000 realized in investment income. That was the end of September. You figure we got about halfway through October before we ended up printing a check for the fire truck. And then even if things stay okay for the rest of the calendar year, we should be able to realize that $50,000. We had increased it at the FinCom meetings and for the estimated receipts, but we didn't increase it that high to 50 because we're still going conservative. We think, based on the fact that we were doing pretty well for the first quarter, that we should easily be able to realize that 50,000 by the end of the year. But we weren't sure to go much higher. So we were able to, with those larger pieces, the investment income, the motor vehicle excise tax, and doing a little bit in the other licenses and permits pieces, those are the ones we majorly focused on for that. Do you have other questions on that, Mark?
Last one, 23. Can you remind me what last year's non-recurring revenue was? 18,761.
Oh, what contributed to it?
Yeah.
It was a couple things. I'd have to pull the expense report, but it included some sales of some vehicles and so forth. I don't have the specific thing. I can happily get back to you afterwards, and it should be in the revenue report. You know what? Hold on one second. I actually have it up. I bet you I can pull it up. Hold on one second. I don't know if it switches what screen I'm on. It's not communicating. Tell me what's happening here, but hang on one second. Miscellaneous not recurring.
You're
Do I have
correct. There
any-
was a sale of a command car, so I don't want to hold the meeting up any longer.
Yeah.
That's a good answer.
Okay.
Yeah,
Okay.
if possible, I'd like to move this along because the longer this takes, I won't be able to get this submitted to DLS today. So anybody else have any questions?
I'll take the floor, Kateri. Thank you.
Yep.
Sarah, I know you've been waiting for a while to ask your question. Please go ahead.
This is like the briefest question. I just wanted to know what defines open space. Like what is that specifically?
So we don't have any open space here in town. It would have to be something that the town would have to vote on and make a classification of we're going to have open space. Is it going to be, recreation space? Is it going to be open space that's going to be forever not developed? It's a process to go through.
So
and
is it town owned space? Is that what it is? Like
it might not even be town-owned space. It could be, what if someone owns, I don't know, 100 acres and they want to keep it forever? They want to put a restriction on it. They want to never build on it. They don't want to,
Oh, gotcha. Okay. So it's like one of those overlay things that we've talked about in the other meetings. Okay.
Yes.
All right. Thanks.
All right.
So are we ready?
Yeah.
Can we go through the questions?
With that, Sarah, are you all set? Do you want to put your hand down just so I can make sure that, thank you. And I'm just going to make sure there's no further public questions. I don't see any hands. So go ahead, Kateri.
And I'm sorry, Julie, I didn't mean to interrupt and be rude, but I'm just like, there's a lot more that I have to do to get this all uploaded and submitted today. And the sooner I get it done and I'm in here on my day off, or actually I had appointments today that I had to cancel and reschedule. So I want to get this done. I'm glad we had clarification on some things, but I still have another hour or so of work, maybe 2, to finish, to finalize.
All right. Well, we certainly appreciate you coming in and doing this on your day off, Kateri.
Not a problem.
Okay.
Okay. So Kirk, are you still there?
Yes, still here.
Yeah, I was gonna say I need Kirk to be there for the questions. So we've already gone through. So the questions are with respect to question 1. Do we want to use factor 1, which would be a single rate, versus chapter 797, formula to determine the tax rate. So a single rate would be 1474, and if we determine a split rate, it would be $22 and change for 2211 for any commercial properties.
Yeah,
Right.
it actually,
So I will accept a motion, if one wants to be made with regard to, factor one versus chapter 797 tax formula to be used for our tax rate calculation.
I think in the interest of being or trying to be business friendly, I think we should move to approve question one for a single tax rate.
Thank you. I'll second that. And just to add some discussion on this, it would be a very minor shift from the residential tax base, but a huge shift on our limited commercial properties in town. So,
Yes.
any further discussion, Kirk?
No.
All right, hearing no further discussion. All those in favor, Kirk?
All right,
And I'll vote aye.
yeah,
Okay.
All right, Terry, we can move on to question two.
let me just drop the link to the regulation in the chat.
Is someone, I'll presume, so question two would be an open space factor. So we can apply a 25% discount. However, we have no open space in town. But we do still have to vote on this. So municipality can apply a discount of up to 25% to open space. Open space discount reduces taxes on property classified as open space and shift those taxes to the residential class. And we cannot include properties that produce any income, have a conservation restriction, or are in chapter land, which is 61, 61A, or 61B. So chapter land is forestry land, agricultural land, or chapter recreation land that is owned privately, that individuals have worked with the state and worked with my office to put their land in that protection.
Okay, great. So I'll accept a motion under question two as to whether or not we apply an open space discount.
we don't have any open space,
Correct.
so
However, yeah, we still have to vote. We still have to vote.
I'll make a motion to approve an open space discount.
Okay.
So Kirk, your motion was to approve an open space discount?
Well, we don't have any open space, so it doesn't matter.
It does.
So I'll make a motion to not, I'll change that. I'll make a motion to not approve the open space discount.
Okay,
Yeah,
so-
or not apply a discount to any open space.
Correct.
Yeah, so that's an amended motion, Kirk. Your motion is now to not apply any discount to open space. I'll second that. Is there any discussion? Hearing
No.
no discussion, all those in favor, Kirk?
Aye.
And I'll vote aye. All right, question three is the residential exemption. Go ahead, Kateri.
Yep, so question three, residential exemption under Mass General Law, Chapter 59, Section 5C. At the option of the Board of Selectmen, an exemption of not more than 20% of the average assessed value of all Class 1 residential parcels may be applied to the residential parcels that are the principal residence of the property taxpayer, as used by the taxpayers for state income tax purposes as of January 1. It's actually, that should be 2023. I apologize. So this is where it comes into effect, where, you know, if Paxton was down the Cape and we had many vacation properties, and the Cape has those residential exemptions because their values are very high, and the residents, you know, the majority down there are second homes. Paxton's not a town that has a lot of second homes or vacation land.
Right, so this shifts the burden from, say, from the residential class to a vacation home. But
Yes,
we don't have a whole lot of vacation homes, so there's really nowhere to shift that to.
correct.
Okay. So I will accept a motion under question 3 as to whether or not to apply a residential exemption.
I'll make a motion not to apply a residential exemption under question 3.
Great. I will second that motion. Is there any discussion? Hearing none. All those in favor, Kirk?
Aye.
And I'll vote aye. All right, Kateri, you can move on to question 4.
Question 4 is a commercial exemption, and that's to allow a commercial exemption. I'm sorry, I gotta take my glasses off. An annual exemption of up to 10% of the class for parcels that are occupied by businesses with an average employees of no more than 10 people. So it's really a small business exemption. But the majority of our small businesses, majority of the businesses in town here have no more than 10 individuals. And it does shift the burden to the other taxpayers.
Yep, so this is essentially the opposite of what we would be doing with question 1.
Yeah.
And shifts some of the commercial tax requirements over to the residential class, right?
Yeah, no, it would reduce their taxes, but shift it to the other commercial and industrial properties that may have more than 10 employees.
Oh, got it. Okay,
Yeah.
great. So there's no, so that's an important distinction.
Yeah.
Because we only have businesses that really qualify in that less than 10 employee range. This doesn't provide them with any relief.
Right.
Okay. All right, so hearing that, I'll accept a motion under question 4.
I'll make a motion to not approve a commercial exemption under question 4.
All right, I'll second that. Is there any discussion?
No.
Hearing none. All those in favor, Kirk?
Aye.
And I'll vote aye. All right, so now that we've done that, Kateri, what's your wrap up?
That is my wrap up. All I would need is for those on the select board, and I believe Donna did forward out the LA5, which needs to be signed after this hearing, once everything is voted on. And I will submit everything to the state, and our tax rate will be set at the 1474. Seeing that there's no changes. So did you both get a copy of the LA5?
I have it. Yep.
Should have been one sheet. So I need a majority of the select board to sign. And it can be uploaded and emailed directly to me.
Very good. Okay.
Kirk, do you have that? Are you available to do that?
Yes, ma'am.
Okay. You have my direct email here, right?
Yes.
Okay, perfect.
Okay. So Kateri, I'm actually shooting this over to you as we speak.
Okay.
Got it. All right.
All right. Thank you
So
very
with
much.
that, I have no further business here on the select board side. I just want to double check my agenda here. Yep, so that is it. So with that, I will accept a motion to adjourn.
Julia, I have my hand up.
Oh, sorry, Mark.
I just want to weigh into a couple of things to acknowledge Kateri coming in on her day off. Also want to acknowledge Julia, at the outset, you said this is not the ideal way or time to hold this meeting via Zoom on a Friday morning at 10 a.m. But I would also want to go on record as saying none of this was of the public making. And I would hope that scheduling and process and the like next year would prevent this meeting from having to take place in the venue and the time that it's being scheduled today, and have the normal tax classification hearing in the evening. So just appreciate you coming in, but would like to avoid the recurrence of this in the future.
Can I make one final comment, please, on Mark's statement, if I'm allowed to?
Yeah, Kateri, if you want to respond, go ahead.
Yes, I do. I would like to respond. So the Board of Selectmen meeting that was scheduled for Monday evening, I had asked that a placeholder be put in the agenda in the hopes that we would have had approval from DLS last week. We did not receive that approval until mid-morning on Monday. And at that point in time, it was too late for the assessor's office to post a hearing because I need 48 hours. In the past, Mark, this has never been a problem, but we are somewhat at the mercy of the state in reviewing all of the documentation that is sent to them. It could take them up to a week. And, you know, they come back and ask a lot of questions. I answer the questions. I have to sometimes resubmit the documentation and they do another review again. And that's how that process goes. So it typically, this is how it's been. This year was just a little bit of an anomaly. So yeah, duly noted. I'll make sure that, you know, the board, my board, is aware of your request.
I don't want it to be my personal request.
Well, you made it as a personal request, sir.
All right, so are there any other questions or anything before we go ahead and adjourn? All right, so hearing none, I'll accept a motion to adjourn. All right, thank you, Kirk. All those in favor, Kirk? Oh, I'm sorry, I gotta second that first. Second. All those in favor, Kirk?
Aye.
And I'll vote aye, so we stand adjourned. Thank you.
Julia, Lori has her hand up. I know we just adjourned, but I'm not
Oh,
sure.
I'm so sorry, Lori. Go ahead.
You're on mute, Lori. Or, well, you're not, but we can't hear you.
Can't hear you.
Nope, still no volume. I'm not sure what's going on. Okay.
All right,
Well,
Well,
we're adjourned, right? So nothing more
adjourned.
after this?
we're adjourned. Yep.
Okay.
All right, thanks. All right, Lori, if there's something